Let's move on to a couple of questions, at least about finances. We, of course, talked a bit about the SBA loan. My attention is being drawn to something I think is quite granular, but if you wouldn't mind telling us, this is another two-part, Aaron. Part one is more broad pros and cons of an SBA loan. I know there's a lot of documentation involved, so that could be a con. Second part is the granular part. Compare and contrast a 7A versus a 504 loan structure.
Okay, I'll take the second part first because that's
All
the
right.
easy one.
Okay, then.
A 7A is typically a goodwill or blue sky kind of loan. So what that would mean is that there's no real estate involved, and it's typically over a shorter term. 7 to 10 years is a typical 7A term. A 504 is truly meant for capital investment, significant capital investments, like a big giant piece of machinery that may cost $1 million or something like that, or a piece of real estate. That's what the 504 program is for. And so that's really the difference. Most business acquisitions without real estate are a 7A loan structure. If there is real estate involved, sometimes there will be a blended structure that's still a 7A, but most of the time it will be 7A for the business purchase, 504 for the real estate acquisition. So I think that answers the granular piece,
Yes.
probably.
Hmm.
So the next part, the pros and cons of an SBA loan. So if you go get a loan for an acquisition from a bank, typically the terms on that are going to be a 5-year amortization schedule. So it's a very aggressive amortization schedule. They are going to require a significant amount of collateralization, either from you or the business. So basically, the way I always try to think about it is, I need to borrow $1 million from you, Mr. Banker. Okay, that's fine. Do you have $1 million I can loan against? So that's collateralization to me.
Hmm.
And then the next phase of it is that there are typically covenants. So you have to meet certain requirements from a cash flow perspective, or you can't go and do certain things without needing, basically permission from the bank. So that's a conventional commercial type of environment. The SBA environment is, again, the term is covenant light. There are no covenants. So they don't necessarily need collateralization. There are several things in there. It's just a more flexible structure. Probably the biggest piece of it is it's a 7 to 10 year amortization with no prepayment penalty. So I get the cheaper payment amount by stretching it over a 10-year period, but I don't have any prepayment penalties. Sometimes those commercial loans won't let you prepay the loan. So, if you have 2 or 3 really good years and you say, hey, I'm ready to get out from under this loan, well, in the commercial environment, you may pay a penalty for that. In the SBA environment, there is no penalty for that. So you can just pay that off. Paperwork is paperwork. Having done a commercial loan myself and knowing what an SBA loan is, I've done more paperwork on a commercial loan than any of our clients have ever done on a regular SBA loan. It's kind of a misnomer with the SBA. If you just follow the directions, and it honestly is, all you have to do is follow the directions. It is simple. We do them every single day, all the time, and I'm constantly amazed that it's not that difficult. And if you just check the boxes, there are no surprises at the end. Just check the boxes. It's a checklist, and you just literally go down and check the boxes. And as you're doing them, complete them, keep a copy in case your banker loses it. And if he calls you and says, hey, I need this piece of paper, all you got to do is shoot an email, or we usually have them on file here, and we deal with the bankers. The banker calls us, and we just send them the email with it. And they're like, man, this is great. You guys keep up with everything. Well, it's a checklist. It's really simple.